Good afternoon, everyone. This is Faith Howard Mooney from the Mortgage Collaborative. Thanks for joining us this afternoon. We still have a few people that are just kind of rolling into the call here, but I think we are going to get started. This session is what's new in new construction. Today, we're really lucky to have with us from our lender member community, Brian Brunhofer. He's told me I can say that Brunhofer or Brunhofer, and he'd answer to either one. So I'm going to take advantage of his kindness there, who is with Taylor Morrison, and Jim Frazier, who is the lending channel manager with Built Technologies. Brian, you want to just introduce yourself here briefly?
Yeah, sure. Thanks, Faith. Brian Brunhofer, spent a bit over 20 years in residential real estate. Specifically home building. Have had the opportunity to work for a couple large builders, as well as for about 5 years, was on the private side, owning a semi-custom builder and developer with my wife up in Chicago. And so it's been fun to see this industry from a couple different lenses, both big and small. Most of my life up in the Midwest. About 5 years ago, we as a family moved to Florida for an opportunity with Taylor Morrison. Taylor Morrison's a top 5 home builder in the country. In our Orlando division, which I'm based out of and oversee, we do about 1,500 homes a year. So it's an exciting time in this industry, as I'm sure you would all agree. I'm just happy to be able to join you guys today.
Thank you. Jim, you want to go ahead and introduce yourself?
Yeah, so Faith, thanks. Jim Frazier. Built Technologies is a fund control loan administration platform. So our job is to serve lenders who are actually dispersing money to home builders like Brian. We have 130 US mortgage companies and banks and credit unions. We even have a Canadian customer on our system. And I'm a 30-year veteran, mostly from the mortgage space, earliest days originating residential construction loans, both construction to perm and renovation products that are sold typically in the Fannie Mae and FHA. And then more recently in my career on the commercial side. And we manage here about 50,000 construction loans. Most of those are properties that are residential in nature. Some are owner occupied, about half of those, and the other half are home builder financed transactions like Brian. So happy to join and contribute where I can.
Thank you. We appreciate you both doing so. In kind of prep for this session, I was doing a little bit of reading and happened to run across the US Census latest report that said new home starts from the home builder field are down 10.3% from January, 9.3% from February. And they attributed the slowing of production, despite the really high demand, to high building material costs and low inventory in places, which I know a lot of us within the network have kind of been talking about some of those things. New construction has come up quite often in our conversation with our lender members. So I think I'd like to start with Brian, if you can just kind of share some of what the major trends are in the new construction space in the last year or so.
Yeah, for sure. You know, it's interesting, right? I'm sure we've all said or heard people say the last year it's been unprecedented, right? And for many different reasons outside of housing supply and demand, but certainly as we've looked at the last 3 to 6 months, it's been very challenging. And some of the those challenges that we're working through, we haven't seen, frankly, ever, right? So everybody's fully aware of the strong demand that's out there. And that's been a great environment. But at the same time, there's some major challenges as it relates to disruption in the supply chain and the ability to keep our production going. And, you know, you mentioned, Faith, this most recent trend. You're exactly right. It's not about the demand and it's not the backlog of homes that we have to build. It's about can we truly get them started on time? You know, we're doing our best to align our sales with not only the production capacity and the challenges that we're seeing with some of our trade supply, but it's also the land supply as well, right? I mean, all builders are very active right now on the acquisition side, but it takes a while to bring a project online. And as we look at the sales demand, we're trying to manage the business, as efficiently as possible to navigate through the joys of having strong demand. So you talk to our VP of purchasing these days, he's more inclined to tell you about what activities or products that he isn't getting calls on from vendors as opposed to the ones that he is. And it's definitely COVID related, related to supply of product. But it's also simple things of, when we had the challenges in Texas with the weather for a week and the aftermath of that disrupted a few different key categories for housing supply for up to 30 days. So there's so many different dynamics that we're keeping an eye on. And for as much as it's important to the business, it's also important to our customers and the folks that, everybody on the call is interacting with on a daily basis, right? These folks who want to buy a home, how do we give them certainty and trust and confidence that we're able to deliver it not only with high quality, but on a timeline that works for them and meets the expectation. So just high level, that's some different dynamics in the industry right now.
And for those that are on the call that, don't really know all of the nitty gritty details, can you give us some examples of some of the supply chain challenges? I mean, I think lumber is one that has been in the news, cost related, but can you give us some examples of some of the other things related that we may not think about?
Yeah, maybe obviously the lumber side of it, many different things driving that, right? You've got incredible demand. And as we navigated through COVID, a lot of the mills were shut down for various reasons. Some of them haven't come back online because they've had challenges recruiting folks back to work. So there's just been a lack of supply of new product, which is causing, those prices to go higher. Early, I'd say probably 6 to 9 months ago, because of some of the additional manufacturing disruption, there's many challenges related to heating and cooling, right? Furnaces, air conditioning units, appliances, big elements of a home that take some time to produce. And whether it be a shortage of workers, whether it be, a certain plant has a COVID outbreak and has to shut down either a shift or multiple shifts, these are the things that are causing challenges in the supply chain and disruption, and causing, delays in products coming out. And I think one of the ways that some of the suppliers are dealing with that is they're going on allocation of goods, right? And although we are a big builder and expect, to have strong relationships with some of these national manufacturers, the response sometimes is we're just in a position where we have to allocate, right? We don't have 100% to give. We only have 80% to give, which means, you're only going to get a portion of what you need. And those are types of things that we understand and deal with, the supply and demand dynamics on a daily basis on the labor side. It's been really unique where we may be accepting of a cost increase because we understand the pressure, and that's multiplied by the fact that there's just not the materials to supply, which is one of the more unique things we're dealing with right now.
And share with us a little bit about how, you're getting a limited supply, which means that the timing and planning of your developments may look a little bit different than how they did in the past. So how are builders working with that as far as their developments opening up? Are you opening up large developments anymore, or are you doing something different to kind of try to meet the demand of those customers that you have who are building?
Yeah, with the demand side of things, very focused in on land acquisition and development and where we need to pulling forward phases, right? I mean, good news, bad news is we've got the land, but you can't snap your fingers and have a developed lot. So there is a typical 7 to 9 month time frame, and not only can you need to control that with your trade subcontractors, your land subcontractors, but you also need to work hand in hand with municipalities, right? And everybody's been impacted by the dynamics of the last 12 months in different ways. So I think there's clearly a push to figure out how do we get farther out in front of things. But at the same time, a lot of us have memories of the early 2000s and the run up, and finding ways to balance, how do we get out in front, but how are we doing that in a responsible way? So there's a balance to it, no doubt, Faith, and one that you got to look at. It's really, and that's what I've always enjoyed about home building. It's local market focused, right? It's local demand in one community in Orlando or in any other city or state. You have to really look at those local market dynamics.
Yeah. One of the things that we're experiencing, so we're, I think I shared with you earlier, we're in a new construction development ourselves. And it's interesting because when you go out and look for a house right now, we're seeing, we've got these 10 lots, not, we've got these 200, lots, and they're going to open up eventually, but we're kind of seeing more of a smaller focus on a development right now. And I would assume that may be because of some of the things that you have just mentioned, is they know they can get 10 done. You can get 10 done in this time frame. You're going to get the rest of them done, but it's so dependent upon the things that are having a little bit of delay right now. They're not opening up developments in the same way. Is that something that you have experienced in as kind of part of your process too?
Yeah, I think we're still trying to focus in on how to develop in the right size phases. But to your comment, we're releasing those lots in smaller phases, right? And I think some of that, like I mentioned earlier, is just we don't want to set an expectation today with a homeowner. And let me give you an example. We might have a community where we feel confident we can sell 4 homes a month typically, right? Well, right now we could probably sell 8, but we can still only build 4 a month based upon our trade partners. So, in order to focus in on the customer and a great experience and alignment with all of our other key partners, such as our mortgage partners, we're only releasing 4 a month in that situation. And to your point, that's causing some consternation because there's people who want to buy and they don't understand, well, why don't you just open up another 4? And it's us explaining to them, it's not just about selling you in a home, building and moving you in. It's making sure that you've got a predictable and enjoyable experience throughout the whole process. So those are some of the, the intricacies or dynamics that we work through today.
Yeah, thank you.
Yeah.
So Jim, you see this from a little bit different angle because you're dealing with, not one home builder or one person. So I'd love to get any comments that you have related to kind of what you've seen and how that may have changed things that you do with Built, or maybe even ways that you're recommending people improve their process because you see it from so many different angles there.
Yeah, I'd take the flip of Brian's side. So, the U.S. housing stock is getting older and older and older, and that started back in 2008 and 9 when the financial crisis really changed the amount of production home building. And I think, Brian, you might correct me here, but I think we're still under the highs of the years leading up to that, where we were producing 1.2 million new units a year. I don't think we've ever got back over 800,000 or something. So
we're close to 1 million now, Jim, but you're right on.
So there's this pent up underbuilt, to meet demand in the U.S. housing market. And that statistically is driving the average age of a U.S. home, higher and higher. And if you think about a house built in the 80s or even the 70s or even before that, right, the condition of the equipment, the condition of the physical structure is completely different now than it was then in terms of efficiency and insulation and materials and form, even the design characteristics of those homes. And so if you think what I see, and when we see a lot of this here across our system, is mortgage originators, big ones and little ones, the Loan Depots of the world, as well as the local originator who is helping consumers buy existing structures. And those existing structures are outdated, they need work. That work is typically sometimes cosmetic, and sometimes it's moving a couple walls. That's driven a lot by HGTV and the shows that are driving consumers to think about how to improve the properties that they have in their neighborhood that are just aged. There's competition for those buildings between the local spec builder, who might be able to snap up that property off market and make a margin on it as a speculative house, and they're competing, head to head with the conventional buyer. And I think that is a whole space that the mortgage profession has typically not done a good job in servicing, because it requires some specialization. You have to understand how to underwrite a construction budget. You have to understand how to evaluate a builder's eligibility and ability, their capability of completing the project. And so, there's a couple things driving that. One is record low interest rates for the last, year and a half or two. And folks don't want to change out their 2.5% loan. So now they're going to need a second home equity loan or other form of financing to do those improvements, or get a Fannie Mae or FHA rehab loan, which are very, very common, but sort of underutilized. So I think that's the yin to Brian's yang on new production, and that also is very idiosyncratic to the markets that they're in. And I'm here in Nashville, and it's a boom town, right? The houses, the inventory of available homes for sale is just it's teeny. And so it's the production, it's the Taylor Morrison's south of Nashville into the Franklin City area or Davidson County, where there is subdivision traffic, whether it's Pulte, Beezer, Taylor, whoever, right? And that is kind of the other side of the coin.
Yeah. Now, you see a wide variety of things for that whole, the construction asset that people have isn't like a 2-month thing. It like runs a gamut. So we had talked a little bit when we had talked prior about, what are the things that are most important during that process that kind of happens, as far as there just isn't the consumer and the home builder in this process. So if you can kind of share a little bit about how you see that.
Yeah, I get there's a whole network, and Brian knows this firsthand probably better than I do. The amount of parties, the ecosystem around the construction of a new home or the renovation of existing home, including inspectors, both municipal and lender inspectors, and title companies issuing date down endorsements, and all the vendors, all the suppliers, the GC, the subcontractors, and you're dealing in those situations in a custom build or owner remodel with a non-professional builder, the opposite of Brian. So this is a consumer, husband and wife, whatever, and they've never done this in their life, and they'll do it one time, right? And that environment creates a lot of stress and strain, and originators, loan officers, lenders really need to be able to handhold. And the way to handhold those folks is to open the playbook so that everyone's working off the same information. And that information asymmetry is really what we do, is we provide a place for everybody to come together and see what's going on. And I think that's vital for budgets to be understood and timeframes to be realistic. And the curse in the construction business, it's never on time and it's never on budget. And so, technology and information is the way to try and assuage and soften those blows.
One of the biggest questions that we've had, or one of the biggest things, I guess I would say, that we've heard lately related to new construction surrounds that word that you just said, budget. So I'd love to hear from either one or both of you on the whole. It seems that it always stems around lumber right now, probably because it's such a big component, and probably since it's had such a big increase. We heard from a lender member this week that they had someone who had addendum to their purchase agreement for their consumer. And you're trying to pre-approve somebody for a home lending loan, and yet they have an addendum that says you're allotted X number of dollars for the lumber for your house. And it's we don't determine what that dollar amount is of the delivery of your loan until the lumber is delivered to your house, which could be dramatically different 60 days from now than it is right now. Just kind of curious if either one of you have seen kind of similar instances come through and seen them happen, and know how people would be dealing with some of those types of things related to price increases on homes while in process.
it's interesting. I haven't heard of that addendum, right? And I think what's interesting is we thought lumber was an all-time high August timeframe of last year. And the way it's described right now is it continues to increase, but it's increasing at a lower rate. So that's what we're excited about right now, which is
Good, yeah.
kind of scary. But, I think my piece of advice is on that is, it really comes down to the size of builder that you're working with, and being upfront and communicative of how they're going to address that type of thing, right? I mean, I can tell you that's one of the obviously right now, if you were to come and buy a home from Taylor Morrison, you're going to agree to a price, and it's our responsibility to build you that home, and whatever the cost is, that's what we have to deal with, right? I think as you're navigating through more of a semi-custom or custom process, that's a great conversation starter with your builder and understanding, all right, well, how are you dealing with the challenges and the increasing lumber rates, and how do you buy your lumber, and when will you lock in on the lumber package for my home, just to have that level of conversation so there's some transparency to it, right? And to your point, maybe with that builder it comes back to, well, I'll let you know when I do it, and that's the price you're going to pay, or maybe there's an agreement in place that says no, I'm going to live up to this price that I've agreed with you on. And then it's, well, how does that flow through the rest of the system, to Jim's point earlier, of all the other key stakeholders that are involved.
Yeah, I think the budget part, and like we look at it, our lens is from the lender's standpoint, right? And both builder contingency and then the lender's contingency helps kind of to dampen the swings, if you will, on some materials. And Brian's probably buying lumber on the train load, and in individual custom or renovation jobs, it's truckloads, right? And typically it's a small truckload. So the swings in the framing budget on a small single deal aren't going to crush it. And frankly, I think some of the other things that are impacting budgets are land costs. And as you said earlier, Brian, there's a lot of demand for housing. And I think it's partly driven by the change, that we all experienced last year. More people will be working from home. I would expect more properties will have an extra room built this year than in any other time in our history for, not a granny flat, but the office, because that's where I'm going to be working for the next couple of years. And I'm sure there's home design changes, Brian, that you probably see in the configuration of the homes you're putting on the market. And those kinds of things change budgets too, Faith, right? And
Sure.
change orders and reallocation from an underwriting standpoint for any originator who's listening to this, right? You really have to be thinking about what the additional reserves are that the borrowers have. At the end of the day, right, the lender and the borrower have the same ultimate alignment, and that is to complete the property for the permanent mortgage to be in place and for the borrower to move in and make the payments they can from their income. And you just can't get there if you've got a wild budget and somebody who's changing it all the time and adding things to it.
Yeah. And whether it's from the consumer side or, the lender side in choosing to work with a new home construction builder, I mean, are there any, tips and tricks that you have as far as choosing a good person to work with? What are the things that you feel like, in having, seen, Brian, many consumers land across your desk every year, that from the consumer side, if they're, hoping to work with a great builder, and then, Jim, too, from the lender side, you've got the lender view on, what are the things that they should be doing if they are trying to set up a relationship with a home builder to work with them on the lending side?
I can take that first, just from my experience in construction, right? And I think I mentioned earlier, having worked both kind of production home builder for a good portion of my career, but also experiencing the semi-custom side of it. I think one of my big takeaways of being on the smaller side was, it doesn't matter the size of the home, how expensive the home is, you want to start with a good process, right? There's a process to build a home in a quality way. And I say that from the standpoint of whether you build one home a year or 20,000 homes a year, you need a process, right? So I think that's probably one of the biggest things number two, after, do you have a great relationship rapport? Do you feel you can communicate with your builder or your construction manager? It's, do you get a good comfort level that there's a process to get it done? And, you know, building a custom home or a semi-custom home, you are bound to run into issues, right? That home has never been built before. You haven't been able to work out any tweaks. There's going to be stuff that happens on the fly. So making sure that you feel good, you're working with somebody that you can trust, you can communicate with, and there's transparency, I think that's, you know, the mecca of the relationship. So those are just some really key things in my mind of getting a comfort level with the people that you're dealing with. Know that, I mean, I think, Jim, you said earlier that the schedules always could be challenged, the budget could be challenged, but as long as you've got somebody who's communicating with you, you can work through those challenges and still end up with, you know, a great home, a quality home, and a really strong experience.
No, I think that's right. I think that the lender side view, Faith, is, and almost all of our lenders I'm thinking about have some form of builder review, right? Whether it's licensure or adequate insurance or history in the trades or even in the size and composition of the project, right? Don't ask a kitchen remodeler to build a 4,500 square foot custom. It just it's kind of obvious stuff, but consumers say, oh, well, my brother knows this guy who did this job, and all of a sudden, you know, they're over their skis in a hurry. So that's kind of one feature, and it is a process, to Brian's point, and that's identifying who are eligible and capable contractors, general contractors, to actually do things on the project. And the other is, and we find this is sort of critical to all lenders, nothing will mess up a construction project faster than choking cash flow. So many lenders think about disbursements of a construction draw as a credit environment. It is a credit cycle. You're diligencing whether or not the payments that are being requested equal the amount of collateral complete on the property. And if you have a lot of lawyers and accountants at the lender's office who don't understand what's going on the ground, they tend to be very conservative and choke the cash flow. If you do not pay subs and suppliers quickly, especially now, and I'm sure Brian knows this, right? That labor is fungible. It will go wherever it can get paid faster. And all of a sudden the project goes from a 9-month build to a 12-month build because the tile guy wasn't paid. That's the death of the small individual construction project. And so speed kills, and speed is important, and everything you can do to find a lender who knows exactly what's going on in a project is vital to the success of that project.
Now would be a great time. Anybody has any questions that's on, we'd love to answer them for you. So please drop them in the chat or the Q&A. Brian, what you stated about looking for a builder related to process really honestly sounds a lot like what a consumer would do if they were looking for a good lender to work with. What is your process, and how does the communication work? And I'm comfortable with, what are you comfortable with? So that was really, really kind of interesting to hear. Obviously, there are some builders that are more sophisticated than others are. And you want, as a lender working with a home builder, you want your consumer also to have a good experience if they're using you. Can you share with me kind of how you do some of that, or how you've seen that due diligence done? I think we talked about some things that may show up on their website that may be helpful if people do their due diligence and looking at people that are building their homes.
Yeah, it's interesting. I had lunch the other day with a friend who's a pretty prominent realtor in Orlando, and he was just talking about the amount of time he spends, out visiting communities, interacting with, builders, salespeople in new construction, and doing his best to really put himself in the shoes of what the consumer is going to experience. So when he comes across a client, he can really speak to, hey, I've visited these communities. I know this person. They've been able to explain to me different processes. They've been able to show me maybe some of their collateral that walks through some of that stuff. I don't think that's any different than, a strong mortgage relationship, right? I mean, get out and know your builder, know those builders in the community, understand how they operate. To Jim's point earlier, how are they financed? How do they pay their bills? And these are, these aren't just questions you can just walk up and feel comfortable asking people. It starts with a relationship, but if you've been able to build that relationship, you'll be able to be a strong source of referral work for those builders when they have people contacting them, right? So I'd say that's one thing. The other is, I think you can learn a whole lot about people just looking at their website, right? And Jim also mentioned earlier, get a sense of what they specialize in, right? And it doesn't mean that you're going to be able to gather all that information just by looking at a website, but there is a big difference for people who solely specialize in new construction and those who have a great business doing renovation. And even if it's large renovations, those are two different animals, right? And based upon the project that your client may be endeavoring, you'll get a sense as to where that core competency is, right? And I was out doing a little research about some competition, and over the last 90 days, I ran into one builder who had the same message on their website. It said, we're excuse the delay, we're reworking our website. It's like, okay, well, it's great. At least you're out there, and I know how to get in touch with you. But that for me would just open up questions. Well, I need to get on the phone and talk to this person because maybe they're designing a great website, but some of it is just trying to get to that level of, am I aligning myself with a strong builder who can deliver for my clients, and do so in a way that is going to be open and transparent. I think that's the research that you can do.
About you, Jim, anything that you've seen on your end as far as research on knowing your builder and better ways to do that?
Yeah, no, I think, and I'm putting on my old mortgage hat, and I'm recalling the days when rates were rising, right? I was living on refis, and 10-year went to whatever it was. It's up from where it was 6 months ago, that's for sure. And so I now need, as an originator, start thinking about how am I going to produce new loans, right? And yes, I'll immediately go back to my realtor contacts, and hopefully I've kept those going. But there's also the home builders, whether they're new custom guys or large renovation folks like Brian just mentioned, that are very active in the market. And they're typically, to speak of process, talking to a borrower early on in the process on developing, pre-design work. They're bidding a set of schematic drawings, and they're probably 6 months ahead of when that property will need financing. Whether it's a lot loan to acquire the lot or actually a construction of perm loan to do the whole thing. If I'm smart about it and the market's changing and rates are rising, there's another source of purchase. It's basically purchase money business. It's a purchase of improvements instead of a purchase of an existing house. But nonetheless, right, that's volume, and that's research, and that's understanding people in your market. And to Brian's point, you got to go out and grip and grin. You got to make those relationships and know what's going on. And it's kind of old school to hit the streets, but that's at least from my experience, that pays a lot of dividends.
Yeah. We have about between 5 and 10 minutes left on the call today. So if you do have any questions, now is a great time to get them in the chat and the Q&A. Brought up something a little bit earlier that I'm just kind of curious and interested in getting your feedback on. We obviously have all spent a huge amount of time in our homes this year, probably more than most of us ever have, which I think has caused people to kind of really reevaluate a lot of things, but one of those is their home. Are there any trends that you're seeing for 2021? I know the home office, obviously, Jim, you mentioned that earlier, is one of them, but any other unique trends or things, Brian, that you've seen people ask for that are unusual and you think you'll see kind of continue on as people, are kind of reanalyzing what home means to them?
It's a great question. Maybe what I defer to is there's, and some of this might be master the obvious, but we've seen a trend away from attached housing, more towards detached housing, right? And I think there's that element of, well, I control my own space, right? And with what everybody's been through in the last 9 to 12 months, there's a little bit more intensity around that. I think we, for probably 3 to 5 years previously, we were always trying to figure out, well, how we've got this big wave of millennials, and at the time there wasn't a focus in on buying a home, right? It was a lot more focus on experiences and life experiences, and I think in the last 12 months we've seen an influx of millennial buyers who are now making the decision to invest in their home, right? And I think the other element is continued focusing on maybe some of that flexibility for multi-generational living, right? And the comment was mentioned earlier about having an extra room. Well, that could be as much as I want to have the flexibility to have somebody stay with me more often, as it is, well, I'm going to be working at home, so I want a home office. So those are, some of the, I think maybe the demographic trends that we're keeping our eye on, and kind of looking forward as it relates to, our product lineup and how do we continue to evolve that.
Right.
It's interesting, Brian. I think you're right. I also think it is driven a lot by what we've seen over the last 12 months, and part of that is places I couldn't go. I couldn't go to the gym, so now I need space for my Peloton, right? I couldn't do this, so I need space for that thing. At the other end of the spectrum, and we're seeing some of this with our commercial clients, is assets that were designed for one purpose are getting repurposed. I think, it's still kind of the jury's out on how much trauma there is in the commercial mortgage-backed business and how much lodging space was under construction that might not be used as lodging in the future because it'll have to convert to something like multifamily or some other purpose, just because of the change in our business travel and all sorts of things. And office buildings that may be repurposed as multifamily in urban situations where it's uneconomic to run it as a leased office space, but it can only be purposed in another use. I think that's going to happen a lot. And the other area where we're seeing a lot of new investment is in 5G infrastructure. So lenders are making loans to business operations to install all sorts of infrastructure related to 5G. That is one big area, and the other area is logistics. So the whole impact of retail moving from, you go to the place to buy stuff to you go online to buy stuff, and the last mile of that stuff being brought to your door is a huge demand on micro space for logistics. All sorts of characteristics that are changing in the environment because of where we've been.
Yeah, for sure. For sure. Well, I don't see that we've had any further questions into our chat or Q&A, but would love just to kind of you give your parting thoughts on anything outside of what we've talked about today that you think we could see as trends this year. No, we covered.
Brian, you want to get
Yeah,
it?
that's good. We covered everything.
No, I mean, the only thing I'd say is it's a really exciting time in, new residential construction, right? And for as much as we can sit here and talk about the woes, it really is just really interesting looking at how things have evolved, since March of last year, and folks wanting to invest in new homes, right? For all the reasons we just talked about, there's so many different factors. And I say all that knowing that, to Jim's point earlier, we still are not producing enough homes compared to where, previous supply was, right? And I'll say it anecdotally, but somebody told me this yesterday, that this is one of the few times in history that right now there's more realtors than there are active listings in the country. And that's just a factor of where demand is, not only for new construction, but just homes in general, right? It's a very unique time. And, for many of us who have been in home building and connected to home building or homes for a number of years, there's an element of we got to be a little bit off our rocker because of the things we go through on a daily basis, the roller coaster ride. But at the end of the day, I've always been passionate about, people delivering an American dream to people, right? And whether that's new construction or somebody who's buying their first home as resale, that's something that's near and dear to my heart. And it's just exciting to know that we've been able to navigate through a really unprecedented time in the history of our nation, but the world. And there's an influx of people who want to have a home, and finding a way to deliver that.
You know what, I'll sort of pivot and say look, I'm in the middle of a prop tech financial technology firm, right? Where everything we're doing is related to digitization of financial, in this case, financial system of construction. And everywhere I look around the ecosystem that we touch, it's the same, and I won't say disruption in a negative way, but it's the same influence of technology that's sweeping across almost every part of the built environment. And I think we're just sort of at the beginning of that. And over the next 5-10 years, you're going to see all sorts of things change. It's changing how realtors operate. It's changing how we operate and our lenders operate. It'll affect contractors. We'll have 3D. There is 3D printing of physical property today that will continue to evolve. I think there's all sorts of wonderful things in the future. So I'll put on my futurist hat and say there's some really interesting things around the corner, and it'll I think help consumers. It'll help the businesses. It'll be wonderful to be a part of.
That was a great way to end. I want to thank both you, Brian and Jim, for joining us today and contributing to our conversation on our TMC Connect platform. We really appreciate you and your time and look forward to talking with both of you soon.
Thanks, Faith.
Thank you.
Sounds
See you
great.
later, Brian.
Take care. Everybody have a great day.